Welcome all of you to this online workshop on how to earn money in trading using the dynamic live. Now earlier in the webinar you must have seen as a trader there are some very special benefits you can draw from this dynamic live, and you must have also seen there are some very unique intelligence at work in this dynamic live which works towards giving us the right entry and right exit in any given market condition. Now having said that, today in this session we will learn things in a bit more detail, because when it comes to starting your trading, now how are you going to trade, what are the points that you have to keep in mind while trading. So these are all some of the important things practically when you sit there to trade. Now how to go about it, this is what we are going to discuss here today. Now once you have subscribed for dynamic live, once you got it installed and activated, when you open it, this is how it is going to look. And in this dynamic live, the first thing, as it is told in the webinar, for you to select any of your favorite stock or index, you just have to click on this favorites and you'll be able to add it. And once it is done, when you look at this dynamic live, there are two different charts that you're able to see. One on the right side, we call it as the intra-week chart. The other on the left side, we call it as the intraday 3 chart. And in both these charts, there is a line that you're able to see, and this line we call it as the long signal. And if you're looking at the long signal in an intra-week chart, we call it as intra-week long signal. If you're looking at the long signal in intraday chart, we call it as intraday 3 long signal, or ID3 long signal in short. Now, before we start understanding the methodology, when to buy and when to sell, there are three important basic things that you have to understand here. Let me tell you one thing. This dynamic live is designed for something bigger. There are advanced concepts like dynamic superpower trading method, which can be implemented using the same dynamic live. But then today we are discussing about Dynamic method level 2, which is a basic version of the same dynamic superpower trading method. Now in this, we are not going to make use of anything and everything which is there in the dynamic live. There are very few specific features or intelligence of dynamic live which we are going to make use of. And when you implement or when you start trading as per the Dynamic method, if you can follow only this much, whatever is discussed in the session here today, that itself is more than enough. Got it? So as I was telling you, there are three important basics that you have to understand before we start. Now the first thing being the long signal. You can see here the long signal can change its color from green to red, from red to green. Whenever it turns green, it means it is telling us that the price is in an uptrend now. Whenever it turns red, it means it is telling us the price is in a downtrend. So just by looking at the color of the long signal, you are able to understand whether the price movement is in an uptrend or in a downtrend. That's the first thing. And the second most important thing here is the zigzag cautions. As you can see here, these are the zigzag cautions. Let me zoom out a bit, the intraday chart. Yes, now you can see here there is a zigzag caution. Even here we have a green zigzag cautions here. Now, whenever a zigzag caution appears, it means the price is about to reverse. Temporary price reversals are identified by these zigzag cautions. But then now you may have a question, there seems to be so many symbols. Now, which one do we consider to be a zigzag? Now, for that, it is very easy. Whenever you see any symbol, for that matter, any symbol, all that you have to do is just come and look at this reason here. In the reason, it will be very clearly written as ID3 zigzag. It means if the zigzag has appeared in the intraday 3 chart, it will be called as ID3 zigzag. Or if it appears in the intra-week chart, then here it will be written as intra-week zigzag. So by this, you will be able to understand that the particular symbol that has appeared in the chart is a zigzag symbol. Okay, so this is the second thing here. Normally, remember, whenever a zigzag caution appears, there are chances the price can reverse. So when we know that the price can reverse, if we already have a position in place, then we will try to exit the trade. In some cases, we will also try to avoid the trade, because while taking an entry itself, if we come across a zigzag caution, then there are cases we will avoid the trade. Now, what are those in detail? We will learn about it in the later part of the session. But then there's a second thing. And third and most important thing here is the long signal edge point. You can see here, the price comes down. At some point, it goes up. And as it goes up, it comes very closer to the long signal. You can see here, sometimes it touches the long signal. So whenever the price touches the long signal, or whenever it comes closer to the long signal, these are all the points we call it as long signal edge points. Once again, if you have a question in your mind saying that now how do we know that whether it is touching or whether it is nearby, how can we call that it is a edge point? Now all that you have to do, whenever the price is coming closer to the long signal, then all that you have to do, whenever it comes closer like this, now all that you have to do is come and read this, what's written in the reason. In the reason, if it is mentioned as ID3 long signal edge or intra-week long signal edge, it means the price has reached a long signal edge point. So normally when price reaches a long signal edge point, once again, the price can reverse. So the temporary price reversals are identified by this long signal edge points once again. So these are the three basic things. That is, by looking at the long signal, the color of the long signal, you are able to understand the trend of the price. Second thing is a zigzag caution, and the third one is a long signal edge point. So these three basic things. Now let us move on to the actual concept. Now how do we start trading? Now when it comes to trading, now all that you have to do, as it is told in the webinar, it is just a matter of 1, 2, 3 easy steps. First step is just click on this favorites to select any of your favorite stock that you plan to trade. Second step is come and check what is written under this Daumantic method action information. Whatever is written, based on that, simply place orders and start trading. Now when you look at the action information, there are some very clear instructions that you will come across. Now you can see here, as of now, it says buy put option now. So if it feels that the price is going to decrease further, then it is written as buy put option now. Later it will tell you to hold put option, and at some point it will be written as exit put option now. That is when you can exit the put option which you have already bought. And similarly, if the price starts increasing, so if it is a good point to buy, then it will be written as buy call option now, and later it will tell you to hold call option, and finally it will be written as exit call option as it is written now. So that is when we can go ahead and exit the trade. So these are some of the very clear instructions. It will be written. Anyone who reads it, they know that it is asking us to buy a call option or a put option, or it is asking us to exit the position. So just by reading, you will be able to understand. But then whenever it tells you to buy a call option or buy a put option, there is one more important thing that you have to learn, and that is to select the right strike price. But today you don't have to worry. Even the right strike prices are automatically selected by this dynamic live. So whenever it tells you to buy a call option, you can come look at this pyramid pointing upward, pick one number out of these three. Or whenever it tells you to buy a put option, you can come look at this pyramid pointing downward, pick one number out of these three. That is your right strike price. Got it? Now once you have selected the right strike price, you just have to go ahead and do the trade. But then when there is a question of which one out of these three are we supposed to select, now if that is a question, then you have to understand that now when you're trading in index options like Nifty, Bank Nifty, or even if you're trading in stock options, we have monthly contracts available for us to trade. Now monthly contract means these are the option contracts which has 1 month validity, so that you can enter and exit any given number of times during this contract period, but before the expiry date. So when you know that it has 1 month validity, now what you can do is you can split that month into 3 parts. The first part you can call it as the beginning of the month. The second part you can call it as the middle of the month, and the third part you can call it as the end of the month. So in the beginning of the month, if the action tells you to buy a call option or a put option, now how do we know that we are in the beginning of the month? Now for that you just have to look at the date. Now today's date is 2nd July 2020. So we are in the beginning of the month, isn't it? So in the beginning of the month, if you get any trading opportunity, it is better you select only the OTM strike price for you to trade. Select the OTM strike prices. Similarly, at the middle of the month, if it tells you to buy a call option or a put option, you can trade the ATM strike prices. And at the end of the month, if you get a trading opportunity, you can trade a ITM strike price. So this is how you select the right strike price out of these three. And then whenever you come to trade in index options like Nifty, Bank Nifty, along with the monthly contracts, you also have weekly option contracts available for trading. So if in case you want to trade in weekly options, if you want your trading to be very peaceful, very simple, without any tension or panic, if you want to go ahead and do the trade, it is better you stick on only to the ITM strike price. Got it? So this is how you select the right strike price. So whenever it tells you to buy a call option or a put option, select the right strike price and just do the trade. Now once you have done the trade, now that you can see here at this point in time, now let me just zoom in a bit. Yes, so today at around this point in time at 15 hours, that is 3 o'clock in the afternoon, it said buy put option now. You can see here it is very clearly written as buy put option now. So what we would have done is we would have gone forward and we would have selected a right strike price. Let us say if you're trading in weekly options, you could have selected the ITM strike price. If you're trading in monthly options, you could have gone for OTM. But then in weekly options, over a period of experience, you will learn when to go for ATM or OTM. But or else until then, you can stick to the ITM strike price. Now, once you have selected the right strike price, just go ahead and do the trade. Buy the put option. So even I did the trade today. I bought a 21,000 strike price put option. Now I bought it at around 158 rupees premium, if I'm not wrong. So once we have bought the option, now we will wait until it very clearly tells us here that exit put option now. Now until it is written there, we are going to hold this put option. Similarly, when you buy a call option, by selecting the right strike price, wait until it very clearly tells you exit call option as it is now written there. Only then you can go ahead and exit the trade. But then in between, there is one more important thing that you have to do, and that is to secure your profits. Now, how to secure your profits? Let me show you a small example here. This is just an example to make you understand. At this point in time, let's assume that it was written here as buy call option now. Just assume. Now, when it said buy call option, let us say I bought a 22,000 strike price call option at 100 rupees premium. And after buying it, the price started moving up. As the price started increasing, now on top we are getting some symbols here in this intra-week chart. These symbols appear only in the intra-week chart. These symbols could be a dynamic system caution or a DMBOTS. So whenever a dynamic system caution, any symbol appears, it means we are supposed to secure our profits. Now, how to secure our profits? Remember, we bought a call option at 100 rupees premium here, the 22,000 strike price. As the price started moving up, when this symbol appeared, by then the call option that we have bought, it is already trading at 300 rupees premium. We bought at 100, now it is trading at 300, let's assume. Now we are supposed to secure our profits. Now how do we do that? Now for that, first we have to exit the call option that we have already bought. So we sell it off at 300, bought at 100, sold at 300. So 200 points is the net profit we have got in hand, plus our initial capital is also back, isn't it? So with the profits that we have earned, part of the profits can be reinvested to buy another call option, because when these symbols appear in this action, it will be still written as hold call option. But we are exiting in order to secure our profits, isn't it? So we will, in order to secure our profits with the profits earned, part of the profits we can reinvest by another call option. Probably I'll go buy a 23,000 strike price call option. Let's say I buy it at 70 rupees premium. So out of the 200 points profit that I have got, I am reinvesting 70 points, which means 130 points are still there in my hand. Now this is the secured and guaranteed profit, right? But then we have reinvested 70 rupees to buy another call option with a different strike price. Now from here, if the price completely reverses, the worst thing that can happen is the 70 rupees premium is going to become zero. Even if it becomes zero, it doesn't matter, because we have already secured 130 points profit. So this trade, we are not at a minus. But instead, if the price starts increasing, then what happens is the 70 rupees premium can increase up to 150, 200 or beyond, so that we will get more profits. So we are securing ourselves time and again. As far as options trading is concerned, this one process is very, very important. And this process of securing your profit, we call it as shift over. So if I tell you to shift over your position, that means I'm asking you to secure your profits. So what you can do is you can exit your trades. Now from one strike price, you are shifting your position to another strike price. But we are still trading the same call option. It is telling us to hold call option. We are still holding on to a call option. Only difference here is from one strike price, we have now moved on to another strike price. In this process, part of the profit is reinvested, or part of the initial capital is reinvested. Okay, so this is what we are going to do here. Now Mr. Shivkumar says intraday and intra-week chart are in green, and Dowmantic level 2 saying exit call and buy put. How to trade? We will come to that point, Mr. Shivkumar. We are just in the first step now. So I hope you people have understood this very clearly. All that we are trying to do here is, whenever the action tells us to buy a call option or a put option, the first thing we have to do is select the right strike price and then just do the trade. Once we have done the trade, we will wait until it clearly tells us exit call option now or exit put option now. But in between, before it says that, if there is any symbol appearing in the intra-week chart, then we will try to secure our profits. In order to do that, we will shift over our position. This is all that you are supposed to do. And remember, if these symbols appear on an expiry date or one day before the expiry date, then we shift over our position to the next contract directly. Got it? So this is how we are going to trade here. Now, when we are implementing it, the first thing you have to do is select your, decide what is your capital. Whatever is your capital, based on your capital, select a quality stock or an index. Once you have selected it, just trade the same script for one entire month. Now, that is the easiest way to do rather than trading multiple scripts every day. Now, when you are implementing the method mechanically for one entire month, at the end of the month, we expect you to earn a minimum of 10 to 15% returns at least per month at the end of the month. But during the month when you are implementing it, you are going to come across lot many trades during the month. In all these trades that you will see, the results will be like gain, minus, gain, or it may be like minus, gain, minus, gain, minus. So this is how it is going to work. But then don't stop anywhere. Just make sure that you implement it mechanically for one entire month. When you do that, eventually out of all these trades, the end result will be a big gain. That is a minimum of 10 to 15% return. Maximum it could be any higher number. There are months where it has given more than what I'm talking about. Got it? So this is how one can implement it. But then it is also known that when people see a couple of minus trades, they panic, they stop trading, they try to do something, all possible things, and finally they end up winding up the whole capital. So when that is the case, in order not to panic and to trade peacefully throughout the month, to implement it mechanically the whole month, all that you have to do is follow some discipline. And we call this discipline as money management. Now, what is money management? Now, first decide what is your capital. Whatever is your capital, part of the capital you can reinvest. 10% of the capital can be allocated per trade. I'll repeat this once again. Whatever is your capital, utilize only 10% of your capital per trade. If you want your trading to be very peaceful, if you feel that you are a person who will panic when you see a couple of minus trades here and there, so it is better you stick to the 10% allocation here. So let us say in this example, I told you we bought a call option at 100 rupees premium. 100 rupees premium, you buy one lot of Bank Nifty, which is a 20 lot size. So we are talking about 2000 rupees investment per lot. But let us say my capital is a lakh rupees and 10% is 10,000 rupees. So I'm planning to trade for the complete 10,000. But here per lot it is 2,000 rupees required. So when it told me to buy a call option here in this trade, I will trade 5 lots. Isn't it? Per lot it is 2,000 and I have 10,000 allocation. So I can trade 5 lots here. Got it? So this is how money management is followed. If you can implement this money management principle, then what will happen is that you know that you have not implemented your, utilized your complete capital on a single trade. You are utilizing only a part of the capital, and you will be able to trade peacefully, and you can implement it for one entire month. And when you do that, eventually you will end up with the positive results. But then when you implement it for a longer period of time, over a period, you will start realizing that earning 10-15% returns has now become very easy. Now, is there anything more that we can do? In that case, let me tell you, as I told you, Dynamic Live is designed for something bigger. It can be used in multiple ways to earn some huge returns. But then today we are going to discuss about Dynamic method, wherein there are additional 2 more steps which can help you enhance your profits further. Now, what is that? Let's see. So let us move on to the second step. If you have understood the first step very clearly, all that we have discussed till now in the first step, the same thing we are going to do it in the second step. Only thing here is before we do the trade. Now, whenever it is, let's say it said buy call option now. Earlier it said buy call option now at this point in time yesterday. When it said buy call option now, before we do the trade, we check intraday 3 long signal, we check intra-week long signal, we try to see what are they doing. If they both are green in color, it means they both are telling that the trend is up. If the trend is up in an uptrend, you are planning to buy a call option, then no thinking, no guessing, just go ahead and do the trade because your trade is in favor of the trend. So that is the right way to trade. That is the best way to trade. But there are times where at this point in time, you can see here now it is very clearly written here as buy put option now. So when it says buy put option now, we look at intraday 3 long, it is green in color. We look at intra-week long, that is also green in color. they both are pointing upward. It means they both are saying that the trend is up. But in an uptrend, you are planning to buy a put option. It means your trade is against the trend. So whenever your trade is against the trend, remember some cases, in this case, both intraday 3 long and intra-week long are against. They both are not supporting. In some cases, one is green and the other is red. Even if that happens, it doesn't matter. Even if any one of these two is not in your favor, if they are against your trade, then it means you are going against the trend. In such a case, whichever script that you are trading, go check some other script which can have an impact on the script that you are trading. So if you're trading in Bank Nifty, go what is happening in Nifty. Similarly, if you're trading in Nifty, then come and check what's happening in Bank Nifty. So this process, when you're trading in one script, going and checking some other script in order to take a decision here. Now this process, we call it as Tenkai signals, T-E-N-K-I, Tenkai signals. Got it? So if you're trading in Bank Nifty, then Nifty is your Tenkai signal. If you're trading in Nifty, then Bank Nifty is your Tenkai signal. So today, when it said buy put option now at around 15 hours, it has very clearly told us to buy put option now. Now we see that intraday 3 long is green, intra-week long is also green. So this particular trade is against the trend. So when it is against the trend, at the same time, what is happening in Nifty is what I am supposed to check. But what will I check in Nifty? I will check for only two things. One is there any zigzag caution in Nifty at the bottom? If it is there, then I will not do this trade in Bank Nifty. Or is there any long signal edge point in Nifty at the same time? If it is there, then I will not do the trade in Bank Nifty. Got it? So let us see what was happening in Nifty at the same time. So you can see here in Nifty, there is no zigzag symbol. It is not there in intraday 3. It is not there in intra-week, because zigzag symbol or long signal edge point can appear in intraday 3 or in intra-week. If it appears anywhere, then we will not do the trade. But there is no zigzag symbol in this case. And the price is not touching any long signal. You can see here there is a big distance between long signal and the price. So there is no long signal edge point, both in intraday 3 and intra-week long signal, intra-week. So since there is nothing, since there is no caution here, neither the zigzag nor the long signal edge point, for that reason, we can go ahead and do this trade. So we would have bought a put option today. So Mr. Shivkumar, I think your question is answered. So this put option, we bought the put option. In spite of this trade being against the trend, we still did this trade because in the Tenkai signal, there was no zigzag, there was no long signal edge point. But if it was there, if we found a zigzag or a long signal edge point, now how will I know that it is a zigzag or a long signal edge point? For that, once again, all that you have to do is just come and check what's written in the reason. First of all, see if there is any symbol that is appearing in the intraday 3 or intra-week chart. See if the price is very close to the long signal. If it is there, you can see, is there any zigzag? Now it is written as ID3 zigzag buy. ID3 zigzag buy signal. It means it is pointing upward, buy signal. Okay. So since there is nothing, then we went ahead and we did the trade. If it was there, then we wouldn't have done this trade. So if it was there, there would have been a symbol here, green colored symbol, zigzag symbol here, right? So that is when we could have avoided the trade. So this is what we do in the second step here. So if we can implement the second step continuously for a whole month mechanically without doing any mistakes, then what will happen is, in comparison to the first step, in the second step, you will see that there are some trades you are able to avoid during the month. And those trades which you have avoided, eventually those trades could have ended up being a minus trade. But since you have avoided them, you have successfully ended up avoiding few minus trades. So when the number of minus trades reduces, then the profits will increase, the balance will also increase. So second step will give you lesser number of minus trade compared to the first step. So the returns here can be expected to be a minimum of 20 to 25% returns at least per month. So there is a minimum at least that we can expect, provided you implement it mechanically without doing any mistakes. So this is about the second step. Now, once this also becomes a habit, now you'll start thinking, if I can do anything more, then we can move to the third and final step. Now, if you have understood the second step, then third step is very, very easy. It is because whenever it tells you to buy a call option, at this point it was written as buy call option now. So when it said buy call option now, we checked intraday 3 long, it was green in color, it is supporting. We checked intra week long, it is also green in color, that is also supporting. We check one more thing, that is dynamic system. Okay, now what is dynamic system? This is another software. Now whoever has subscribed to Dynamic Live, you will be given dynamic system free for a limited period of time based on your subscription. Now in this dynamic system, normally we use dynamic system in order to do positional trading. Now how to do positional trading using dynamic system? There is a very clearly defined method. We call the method as the dynamic system level 2 trading method. Got it? So as per that method, what is the current position? Are we supposed to be holding a long position or are we supposed to be holding a short position? This is what you are supposed to check. So in this case, if you see, when it said buy call option now, at this point when it was very clearly written as buy call option now, we checked intraday 3 long, it was green, it was supporting. We checked intra week long, it was also green, it was also supporting. And when we checked the dynamic system level 2 trading method, as per that we were supposed to be holding a long position, and that is also supporting, because all three of them are telling you that the trend is up, and in uptrend you're planning to buy a call option, so your trade is in favor of the trend. So no thinking, no guessing, just go ahead and do the trade. Just do it. But then there are times like this where it is now telling us to buy a put option. So when it says buy put option, we checked intraday 3 long, it is green, it is not supporting. Intra week long, this is also green, it is also not supporting. We check dynamic system level 2 trading method. As per that, we are supposed to be holding a long position, that is also not supporting. All three of them are not supporting. In some cases, two are supporting, one is not supporting. So it doesn't matter, any one of these three, that is intraday 3 long or intra week long or dynamic system level 2 trading method, if any one of these three is against the trade that you are planning to trade, then in that case you must check the Tenkai signal to decide whether to do the trade or not to do the trade. If all three of them are supporting, then there is no need to check the Tenkai signal, you can simply go ahead and do the trade. So today at this point, when it said buy put option now, intraday 3 is against, intra week is against, dynamic system level 2 is also against. So for that reason, we went ahead and we checked the Tenkai signal. We saw Nifty earlier and we saw that there is no zigzag, there is no long signal edge point. Since there is no cautions there, we went ahead, we did the trade. Even if it is against the trend, we have done the trade. If there was a zigzag or a long signal edge point in Nifty, then we could have avoided the trade in Bank Nifty. So this is all we do in the third step. So in this third step, only thing is, along with intraday 3 long, intra week long, we also check dynamic system level 2 trading method. This is the only thing that we're going to do here. So when you implement it for one entire month, you will see that the number of minus trade comes down even further compared to the first and second step, which will help you enhance your profits. So if you can mechanically implement the third step for one entire month, we expect you to earn a minimum of 30 to 40% returns at least per month. Okay, so this is how you implement it. So this is all about the third set, all three steps. Now, in order to complete this third step, there is one last point that I would like to convey. For that, I must open a dynamic system chart. Let me open dynamic system. In the meantime, if anyone has any other questions or doubts till this point, whatever we have discussed, then you can ask me now. It is almost done. Yes, so there's the dynamic system. So this dynamic system, in this dynamic system, you can see here, these are the price movements. These are the price movements here. Now, along with the price movements, you can also see there are three lines. One is a black line, we call it as speed trend. The second one is a green line, we call it as mid trend. And the third one, we call it as the long trend. The purple one, we call it as long trend. These are the three trends. Whenever the price is trading below all the three trends, then it means it is in a clear downtrend. Whenever the price is trading above all three lines, it means it is in a clear uptrend. But then there are times where the price trades between the three trends. So these are the places where it trades between the three trends. So in this case, whichever stock or index that you plan to trade, if it is an in-between trend as per the dynamic system level 2 trading method, then in such a case, whatever trading opportunity that you get here, for all the trades, you must check the Tenkai signal, provided if it is an in-between trend. Even if intraday 3 long, intra-week long, and dynamic system level 2 trading method, even if all three of them are in your favor, but it is an in-between trend, then in such a case, you must check the Tenkai signal for all the trade. Got it? So this is how you trade as per the third step. This completes the third step. Now, for you people to learn about dynamic system, now where to go and learn, now where to find it, find the training videos related to that. Let me show you. For that, you have to log into our official website, that is dynamiclive.in. Now, as I show you, in the meantime, if anyone has any questions or doubts, you can text me. If there are no questions or no doubts, then you can text me saying that there are no doubts. Let me open the website here. So this is the official website, dynamiclive.in. In this menu, you can see it is written as members area. Just click on it. Once you have selected the members area, you just have to fill in your email ID and password. So log in using your credentials. Now the password will be mailed to you once you have subscribed. And once you have logged in, you can see there is a training 2020. Just click on it. So once you did that, you can see these are all the reference training videos. If anyone wants to learn about dynamic system from scratch, this is the first video that I would like to watch. That is a dynamic system basic navigation. So in this, how to open a chart, how to open a report, what is there inside dynamic system, what do we understand using them. All these details are very clearly explained. Now after that, you can scroll down a bit further. So here is the dynamic system level 2 trading method that I was talking about to do positional trading. But then before you watch this video, I request you to watch the level 1 trading method first and then come and watch level 2 trading method. That is when it will become very easy for you to understand. And rest all other videos are for reference. So if anyone wants to trade in, as per the second or third step, you can definitely go through this video before you start trading. So in this step, as we discussed, if you're trading in Nifty, then Bank Nifty is your Tenkai signal. If you're trading in Bank Nifty, then Nifty is your Tenkai signal. But if you're trading in any stock, then which is your Tenkai signal, how to find it, where to find it, all these details are explained very clearly in this video. And then moreover, these training videos are there in 4 different languages. You can opt for any one of the language that suits your requirement there. So this is how you can go about doing. So this is all about today's session, gentlemen. If there is any other questions or doubts, you can ask me now. All right, looks like there are no doubts. So gentlemen, thank you all for joining today's session. Wish you all a happy trading and a very good evening. See you on the other side in the next session. Until then, good evening once again, and thank you once again for joining the session.